Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are looking at the top 10 stocks that Morgan Stanley is advocating for investors to buy. Now, originally, this list came out in the beginning of January, and right now we're about halfway through the year, so I'm going to critique their picks and tell you which picks that I personally own and which picks that I would actually avoid. So next to the ticker symbols, you're going to see either a check mark, an X mark, or a dashed line. The dashed line means that I am not invested into the company right now, but it is on a watch list. If you see an X, it means I don't really like that company for a long-term hold, and if you have a check mark, it either means that I'm actively investing into that company or I'm willing to hold it for the long term. Right now, if you haven't noticed, stocks are absolutely plummeting, which to me is a phenomenal buying opportunity, because like Warren Buffett always says, be greedy when others are fearful and be fearful when others are greedy. And because we have entered into a bear market and a recession, this is the perfect time to be greedy. The current economy has high inflation and high interest rates right now, and this is negatively impacting stocks. However, in the long run, I believe all of these problems are going to get resolved, and that's why I think the economy and these businesses will recover. Morgan Stanley also is recommending to investors to actually buy growth and technology stocks, which are the type of investments and assets that have actually been hit the most because of this recent recession and bear market. So with that knowledge, remember to go and smash that like button for more videos like this one, subscribe if you are new, comment down below one of your favorite stocks that should be on this list, and without further ado, let's jump right into today's stories. Also, I want to say that the ranking of these companies from 10 to 1 is not necessarily which company they think is better, but rather how many hedge funds are holding these companies. So they're basically tracking what smart money is doing. So now that you know that, let's jump right into our number 10 spot, which is Rivian Automotive Inc., ticker symbol RIVN. Now, to keep this video short, I can't go into too much detail regarding all of these companies, so I'm basically just going to tell you what these companies do and the price targets from investors, bulls, analysts, and of course financial institutions. And this company is an electric vehicle developer and manufacturer, and they mainly offer a 5-passenger pickup truck, sport utility vehicles, and delivery vehicles. They also have a couple high-end contracts. However, ever since this company actually went public, it surged in price and then it absolutely plummeted. And while this stock was actually increasing in price, I made a video predicting that it was absolutely going to crash back down. And if you don't believe me, you can always search my channel and pull up that video, how I successfully predicted that Rivian stock would absolutely crash. But nonetheless, this company did make it into Morgan Stanley's top 10 stocks to buy right now, and they have an overweight rating, which is a buy rating, which is actually pretty phenomenal. Right now, the RIVN stock trades for around $28 per share, while very bearish negative investors say that the company is worth $24 per share. Very positive and bullish investors say it's about $147. And if you're more in the middle like me, you think this company could recover to around $58 during the long term. However, I do want to say that these are 12-month price predictions by both analysts, investors, financial reporters, and financial institutions. Moving right along to our number 9 spot, we have FREYR Battery, ticker symbol FREY. And this is actually a foreign company that is based over in Norway, and clearly they specialize in manufacturing battery cell technology in regards to sustainable energy sources. And of course, Morgan Stanley rates this as a buy rating right now, with the current stock price hovering at around $7 per share. Now, I do like to see how the current stock price is trading below even what very critical investors think the company is worth at around $8 per share. And then in the middle, we have around a $15.40 price target for the next 12 months. And then on the higher end, we have a $20 price target for this company, coming from very bullish financial reporters. In our number 8 spot, we have none other than Ferrari NV, and their ticker name is RACE, ticker symbol RACE. And this actually ranks as the number 1 stock on a particular analyst from Morgan Stanley named Adam Jones. Originally, he had General Motors as the number 1 company, but now he's actually saying that Ferrari is the number 1 company. And if you didn't know what Ferrari does, basically it designs, engineers, produces, manufactures, and sells luxury performance sports cars that are on the very high end. And this analyst actually believes that they're going to introduce themselves to the electric vehicle sector. So they are going to start making electric electric vehicle sports cars for the hyper rich. And because it's on this list, this company also has a buy rating from Morgan Stanley. Moving to our number 7 spot, we actually have a government contractor named Northrop Grumman Corporation, ticker symbol NOC. Northrop Grumman, if you didn't know, is an aerospace and defense company, and it was actually rated as the preferred defensive prime for investors that look to Morgan Stanley for their stock picks. So clearly Morgan Stanley thinks that Northrop Grumman is literally the best contractor to buy right now. The NOC stock trades for around $461 per share. However, financial reporters actually think the company is worth around $377, even though right now the company is holding its value very nicely because of the geopolitical tension and the war happening between Russia and Ukraine. The average price target, according to analysts, is around $484. However, bullish and positive investors actually think the company could go as high as $550 per share, and this is why it's one of Morgan Stanley's top picks. Up next, we have our number 6 spot, which is another defensive contractor, which is Lockheed Martin Corporation, ticker symbol LMT. And currently, Lockheed Martin mainly focuses on security and aerospace. Morgan Stanley absolutely loves this company, and this company is actually trading for cheaper than Northrop Grumman at around $417 per share, while this company's critics say it's only worth around $391. However, investors who own this company are looking for the stock price to appreciate to around $539 per share, while the average of these price targets is somewhere around $484, which is literally identical to the average price that we had for Northrop Grumman. So with our first 5 picks from Morgan Stanley complete, we're going to start moving on to the really big picks, which are going to be in their top 5. And we are going to begin with Tesla Inc., ticker symbol TSLA, which currently trades for around $707 per share. If you didn't know, Tesla is an electric vehicle manufacturer. However, this company also is very involved in energy generation and, of course, energy storage. So Tesla does a lot more than just making electric vehicles, and I can't go into too much detail for this particular company or any company on this list because I want to keep this video relatively short so you all know what I am buying, what companies I like, and what companies Morgan Stanley likes most right now. So Tesla has a low-end analyst price target of around $900. However, very bullish investors think that the company could be worth at least $1,620 in the next 12 months and even higher than that. So again, the stock price could go even above $1,620, but I do want to say that the company is going to initiate a stock split, so they might not actually reach that $1,620 mark. The next company we're going to be talking about is TransDigm Group Incorporated, ticker symbol TDG, which currently trades for around $525 per share. And if you didn't know or you haven't heard of this company yet, this company mainly specializes in the design and production of aircraft parts. This company has phenomenal overall contracts, and Morgan Stanley rates this company as overweight, which is a buy rating right now, especially because it's trading below all types of critiques that investors and various financial institutions are throwing at it, because many investors who don't like this company agree that the company is currently undervalued right now because they think the company is worth at least a minimum of $620 per share, while the average price target for the company is $626, and the high-end price prediction goes all the way up to $801 per share. So clearly, this company is absolutely primed for an investment right now, and that's exactly what Morgan Stanley is advocating for in regards to this particular company. In our number 3 spot, we have a company that I actually am not a big fan of, and that is Wells Fargo and Company, ticker symbol WFC, which is why it has an X next to it. Now, we've seen a couple companies with a dash next to it, and we've seen a few with an X next to it. However, for Wells Fargo, I do think there are other companies that literally do exactly what Wells Fargo does, and I think they do it much better. But nonetheless, the company does trade at $38 per share, while the low-end analyst price target is $39, and the high-end analyst price prediction is $70, while the majority of investors think that the company is worth at minimum around $57 per share. Wells Fargo mainly focuses on their financial services, and they have around $1.9 trillion in assets that they manage. Also, I want to note that 1 in 3 US households actually use Wells Fargo. However, as technology continues to innovate, I think Wells Fargo will eventually be left behind because I don't think they they are a very innovative company. However, if you really like Wells Fargo, again, feel free to go for it, or at minimum, put it on a watch list and go do the research for yourself, because again, I don't have time to go into too much detail regarding these companies and the real nitty-gritty about why I like some companies and why I don't like other companies. Right here, I'm just focusing on the companies that Morgan Stanley likes, and I'm using this as a platform to tell you all the companies that I agree with and the companies that I actually don't think are a very good investment opportunity. So just because I don't like a company, it doesn't mean it's a bad company. It just means that it doesn't necessarily align with my personal investing goals, strategy, or I don't think it's a good investment opportunity. Now, in our number 2 spot is one of my all-time favorite companies, along with Microsoft and Google, and that is going to be Apple Inc., ticker symbol AAPL. Apple, if you didn't know, is a huge information technology company that makes, manufactures, markets, and designs smartphones, computers, tablets, wearables, accessories, and various other electronics, all under the Apple brand. Morgan Stanley loves Apple, and the majority of hedge funds also agree that Apple is one of the best all-time investments of our time. Apple is set literally to have their finger in everything in the future, so the company is still going to continue to innovate even though it is already a huge blue chip company. Right now, the AAPL shares are worth around $135 per share. However, investors think the company could at least be $214 over the next year, while the naysayers of this company agree that the company is undervalued right now because they think the company is at minimum worth $155, which would give us give or take around a $188 middle ground price target for this particular company. Remember, if you're watching this channel and you want long-term growth holds to buy, Apple stock is literally one of the best. You want to really focus on ETFs, in my opinion, and blue chip stocks, and those are going to make up the foundation of your portfolio, and then you can diversify into single growth stocks such as SoFi Technologies in the future. But again, you have to weigh the risk to reward, and overall, Apple is a very stable company that I really like, and it makes up a lot of my portfolio. Even though I don't own a lot of Apple stock based on an individual investment, I do own a lot of Apple because Apple is incorporated in many ETFs that I own. Now to get to Morgan Stanley's number 1 company, Uber Technologies Inc., ticker symbol UBER, and honestly, this rather surprised me. Now, if you didn't know, Uber develops and operates their own proprietary technology surrounding ride-sharing services and transportation. Morgan Stanley analysts love this company for whatever reason, and again, this company has a dash next to it because I really want to see how Uber keeps developing itself over the long term. I do think they have good technology, but I'm really waiting for something big to happen before I invest into this company. So this company has a dash next to it. Now, it is trading at a good discount of around $21 per share, while investors agree that the company is undervalued because at minimum the company should be trading at around $27 per share. However, very bullish investors think the company could be worth anywhere between $50 and $75 per share. Now, I do want to make a side note that Morgan Stanley analysts have commented on this stock, and like I said earlier, this is one of their favorite stocks because they all have an overweight/buy rating. Now, I do want to say that we are discounting other large FANG stocks. So even though Apple was on this list, other companies such as Meta Platforms, Amazon, Netflix, and Alphabet were not on this particular list. And to me, I think all 5 of those companies should be in the majority of people's portfolios depending on what their overall investment goals are, especially if it's growth over the long term. But with that being said, I would love to hear your favorite stock down below in the comments that did not make this list. Feel free to comment that stock down below and tell me why you like it. Remember to go and smash that like button for more videos like this one, subscribe if you are new, and I will see you in the next YT video.